Hi everyone, Mr. B here. Today's topic
is mortgage. We're going to talk about mortgage. This is everybody's dream to have a house for them at any cost, as long as they have it, which is not a good solution. A mortgage is probably the biggest transaction in somebody's life. Remember, you have family, you need to think about what's right for that family and its future. We need to know one thing too. Uh, the government said for each mortgage term, which is technically each mortgage term, it can be up to 5 years. For each mortgage term, you're allowed to pay an extra amount not exceeding 25% towards that principal amount, which is good. We'll get into that into detail. Okay, so now today's topic I call it ABC of paying your mortgage in less than 10, I'm so sorry, in less than 8 years. What we're going to do, we're going to make the lenders bite their own bait. There's a formula for that. We'll get there. Please get used to two terms, CMHC and HELOC, H-E-L-O-C. What is the CMHC stand? Okay, it means Canada Mortgage and Housing Corporation. It's a fee that the government charges you whenever you have, it's like an insurance fee on the mortgage whenever you're putting a down payment that's less than $25,000. Okay, the H.E.L.O.C itself, H-E-L-O-C, it's a home equity line of credit. You can use it, you can obtain it first once you have a mortgage, and you can use it like a regular credit card, which means more you use it, you pay it, it becomes available again, you can use again and again and again. Okay, so far I've been browsing the internet for quite a while and I've been through this. I know what I'm talking about. I'm trying to help those who need help, who don't know what to do. For instance, if your mortgage is $100,000, as I said, we're going to try to make the lender pay most of the interest while we're going to use the lender's money to make money for ourselves. I am serious. All you need is having a good credit. Do you remember earlier I was talking about the $9,000 fee for the CMHC? Do your best. If you can bypass that $9,000, that means if your mortgage is $100,000, you're required to put 5,000 down, which is 5%. But if you put only the 5,000 down, definitely you're going to be charged $9,000 CMHC fee. That $9,000, what they're gonna do is, if it's 100,000 mortgage, you pay 5,000, you're gonna have 95,000 mortgage to be paid. They're gonna bank the 9,000 on top of the 95. You see what's gonna happen? We're gonna have a mortgage of 104, which you're gonna pay over 30 years. Imagine the 9,000, they're gonna make you pay it over 30 years. That 9,000, don't quote me on my calculation. It's just for the purpose of your understanding. That $9,000 is going to become, let's say, a good maybe $30,000 by the time you finish to pay the mortgage in 30 years. Okay, and as I said, you need more down payment to avoid bypass that $9,000. And I said you have to have the HELOC, the home equity line of credit. Once you have the house, try to have it. And lastly, no matter what, if you are not disciplined, you're not in the game. Now, upon taking possession of the house, as I said for the HELOC, go to your lender, ask them for a HELOC of, let's say, if you're lucky enough, it can be way more, but I'm just saying $25,000. And once you have it, what you're going to do now, don't do, even though you have a repair to do on the house, don't do it. Most of repairs, they're not that major, they can wait. You can do them gradually. With the HELOC, don't use it like that. What are you going to do? You're going to use everything on your mortgage principal amount to reduce it. You're going to knock it off $25,000. Remember, that money, the bank is not going to tell you those tricks. Okay? During the first 5 years of mortgage, as I said, please, you know, I use the 100,000 as a calculation. Please do not quote me on it. So it's just for your understanding. Okay. For the first 5 years, you're going to have a rate, let's say, at 2.75% for the mortgage. You can end up paying average, let's say, $500 a month for the mortgage over the next 5 years. Guess what? The portion of the interest that you will be paying is about 80% of all the payment you're going to make within the first 5 years, and only 20% will go towards the principal. I don't want to give my personal opinion on that, but you can decide as per your understanding if the government is treating you as well what the big guys are doing, the banks or whatever, those big lenders. It's not nice. If you use the H.E.L.O.C towards the principal, guess what? You do. Yes, I understand you borrow money. It's like you borrow money a second time, but guess what? You do not incur more debt. You just move money around, because once you enter the house, because initially you're going to put 25,000 down out of 100,000. That means you have a loan mortgage initially for $75,000. If right after you use the H.E.L.O.C $25,000, okay, you're going to reduce. Yes, you're going to, not a lot, believe me, but you're going to knock, if you use it towards the principal of the mortgage, you're going to knock your principal of the mortgage 25,000. Now right there, guess what? You have $50,000 in mortgage, while you're still going to have to pay the H.E.L.O.C. You will see that $25,000 knockoff will make you save a minimum 10 years of mortgage interest. And this is not all. The most interesting part is to come. Let's do this math. Initial mortgage amount 100,000, down payment 25,000. Let's stop here right now just to tell you. Focus on the red numbers, okay? You will see, because they are what you have as a mortgage as you go through what you have left until it becomes zero. Let's start again. Initial mortgage amount $100,000. Mortgage payment, down payment, sorry, 25,000. When you get in the house, you get in the house with a balance on the mortgage which is 75,000. Don't be scared. You see? Now, as I said earlier, your monthly mortgage payment is about $500 a month. Over the next 5 years, it's going to be $30,000. Out of that $30,000, you will end up paying $24,000 in interest, which is a waste, and only $6,000 that will add up on your principal. Out of the $75,000 that you owed, in 5 years, using $6,000, you're going to have only $69,000 left to pay. Remember, we're not done. We don't calculate the H.E.L.O.C I told you to use to knock off 25,000. Now use it in the calculation. You use it, guess what? You pass from 69,000 minus 25,000 H.E.L.O.C, you get 44,000 to pay on the mortgage. Now, let's say while you're paying your mortgage, within the first 5 years, because you use the H.E.L.O.C, do your best to pay it off, because remember, it's like a credit card. If you use it, you pay it back, it's available to you again. Now, what you're going to do for the first 5 years, you knock off your 25,000 extra on your principal, and you already repaid your H.E.L.O.C, which is available to you. Now, after the 5 years, now it's time to renew your mortgage. Upon renewal, before you even do that, you tell the bank you want to use your H.E.L.O.C again towards your principal. Now, right there, you're going to knock it off 25,000 less again. That means at the end of the first mortgage, it was 44. Now you're going to use the 25,000 H.E.L.O.C. Now you're going to start a new second mortgage at $19,000. Can you believe it? I'm not telling you anything that only Houdini can do. I'm not a magician, I don't know, but it's right there. You can judge for yourself. It's so simple, okay? Technically speaking, if you can pay the next H.E.L.O.C, the second one, within 3 years, this is what's gonna happen. Let's follow the math. If you finish to pay the H.E.L.O.C, you still have the money available. Yes, leave it there. Upon the renewal of the mortgage, you have $19,000 to pay to finish. That's what you have left. Now, 3 years, an ongoing payment of 5,000. That means 36 months. That means 36 times 5,000 is $18,000. Remember, out of those payments, only 20% will go towards your principal. Out of $18,000, only and only 3,600 that's going to be add up and to reduce your $19,000 new mortgage. That left you with $15,400. Now you will see a move. What you gonna do now? You have $15,400. Remember, your H.E.L.O.C is still available to you. You have 25,000 in the H.E.L.O.C. You can use any moment. What you gonna do now? You're gonna call the bank. You're gonna tell the bank take enough from the H.E.L.O.C to knock off completely the mortgage, which is 15,400. So now you consider in close to 8 years, you are mortgage free. Your house is yours. The only thing is you have to continue paying the $15,400 you use from the H.E.L.O.C to pay it. You can pay that at your own space. It's so simple. It's not mathematics. It's just pure common sense. But not everybody knows that. One thing you have to put in mind: never, never, never don't refinance your mortgage at any given time. If you ever do that, it's like you start fresh again from day one. It's a brand new. Let's say you're going to sign for 30 years again. This is a nonsense. Don't allow yourself to commit that. Don't do that. All right, now I need your opinion on this. We will discuss it probably in the next video. Tell me, what do you consider buying? A condo or a house? Alright, so for now, I think that's it. If you like this video, please subscribe not to miss any upcoming ones. Thank you so much for watching.